Welcome to this evening's webinar, Becoming an A-Plus Investor, led by Wayne Thorp of AAII. A handout of the presentation is available under the Handouts panel of your GoToWebinar control panel, located on the right-hand side of the screen, as well as instructions on how to operate the control panel on your device. If you have questions for our speakers, please submit them using the Questions panel of your GoToWebinar control panel. Our moderator tonight will select questions submitted and read them aloud for the benefit of all watching the broadcast. If you experience any issues with the audio or video of the webinar, please consult the instructions on how to change your device's settings or consult the GoToWebinar website for support, www.gotowebinar.com. A replay of the presentation will be available tomorrow on AAII's YouTube channel, along with links to this evening's handouts and to some of the resources discussed. These links will also be sent to your email address. Now, please sit back, relax, and enjoy this live presentation. Take it away, John and Wayne.
Hello, and welcome to this evening's event. My name is John Bykowski, and I'll be acting as the MC tonight, and I'll be monitoring your questions in the questions panel, passing them on to Wayne, our speaker this evening. I'd like to thank Ryan for being our producer tonight. And not only is he our producer, but he also heads up our overall community efforts, which includes local chapters, our investor conference, and these online events. And we actually might be losing Ryan for a couple of weeks. Not only is Ryan a valued employee at the association, he's a father of one, he's an expecting father as well. And he and Jenna are due to have their second child shortly, so wish them best of luck, and we're hoping for a quick recovery and having him back in our staff here. And, you know, we here in Illinois are still sheltered at home. And as such, you know, Wayne, I'd like to welcome you. I'd like to know where are you broadcasting from tonight?
Hello, John. Thank you very much. I'm broadcasting amongst the pine trees and cornfields of Kane County, far western suburbs of Chicago.
Well, that's interesting. You grew up, though, I think, probably in a state not too far from Illinois, though. Isn't that correct?
I grew up in Michigan, and actually, I'm living. It's funny how life comes full circle. I'm actually living in an area that's very reminiscent of where I spent my formative years in Michigan. So it's good to be home.
Well, that's wonderful. I know just recently you were living in Chicago. I guess sounds like you don't miss that. I know the commute's longer now, but at least, well, normally the commute's longer now, but I guess you certainly don't miss the city life, huh?
Yeah, these days the commute is just that one flight of stairs down to my office in my basement. But yeah, I was in Chicago up until a couple of years ago, and especially with everything that's going on right now, I'm very much enjoying living out in the much quieter and cleaner suburbs.
Now, our members are, I'm sure, very familiar with much of your work. I mean, you've been a contributor here at the association for many years. You know, you are the lead portfolio manager for the Stock Superstars report. You head up the development of the Stock Investor program, and most recently, you've actually taken on the effort of developing the A+ Investor. And you know, I'm going to pull up a little graphic here, or a little image here, and I'm not sure how well our members can see this, but you know, for the last 40 years from our inception, really, the association has worked with individual investors like you. And our goal from the beginning, and I'm going to read this mission statement here: the American Association of Individual Investors is an independent nonprofit corporation formed for the purpose of assisting individuals in becoming effective managers of their own assets through programs of education, information, and research. And you know, A+ Investor, I think, is really kind of the intersection of really those three things: education, information, and research. And Wayne, why don't you tell me even how the name A+ came about?
Oh, well, you know, naming is so much important aspect of any product, but what really stuck with me and what was always rattling around in the back of my mind as we were developing this product was both of my parents were middle school teachers for combined for almost 70 years. And that's what has attracted me to AAII, you know, for the 23 years that I've been at the association now, is that educational aspect. And so merging the teaching aspect and the grading aspect and coming up with that A+ investor, and you know, the ultimate goal is helping individual investors achieve that A+ grade in their investments.
Well, I'm gonna fade into the background here. I'm gonna watch the questions panel for questions. But I guess, Wayne, you're gonna basically run through the presentation, and you'll be then taking questions over the course of the evening. Is that correct?
That's correct. It's a little more challenging in a webinar format, but I'll try to, from time to time, stop, see if there's any questions that have come up. But I definitely promise I'll stay to the very end to answer any questions that anyone may have afterwards.
Very good. Well, take it away, Wayne.
Well, thank you very much, John. And once again, I'd like to welcome everyone to attending this evening's webinar. First and foremost, I just hope that you and yours are staying safe and healthy in these unique and challenging times. And I want to thank you all for carving out the next hour or so of your evening to learn more about this very unique and interesting product that AAII has recently launched. So at this point, I'm actually myself going to fade into the background, and I'm going to start sharing my screen to run through my presentation for this evening. So there we go. So yes, stop that as well. So as John alluded to, nearly 2 years ago, myself, the other analysts at AAII, and our tech team started developing a service for AAI members that combines elements of financial planning, stock, mutual fund, and ETF discovery and analysis, portfolio tracking, and asset allocation analysis. And the result of that work is A+ Investor, which we launched at the beginning of this year. When we set out to create A+ Investor, we started looking at a lot of the different problems that our members come to us to try to get answered. And we tried to develop a service and offer tools that answer a lot of these questions that AI members face as investors. And these questions include, how can I discover, analyze, and sell investments following a sound and objective framework? How do I build, track, and manage a diversified portfolio that fits my own time horizon and risk tolerances? And how can I identify strong performing investment strategies that fit the type of investor that I am? And these are just a few of the questions that that A+ investor subscribers and users hopefully find to be answered. So AAII's A+ Investor is a multifaceted online investment discovery, analysis, tracking, and planning service. Unlike several of the different premium products that AAII markets, such as our Stock Superstars report, which I am the lead analyst on, A+ Investor is not a portfolio service. It is an online analytical tool suite, basically, that helps investors discover and analyze stocks, mutual funds, and ETFs, as well as track and analyze an investment portfolio. So start walking through some of the key features of A+ Investor. We're going to start with what I consider to be sort of the cornerstone of not only A+ Investor, but actually a service and a tool that's accessible to all AI members, and that's our new My Portfolio tool. This is a portfolio tracker that we built internally and in-house from the ground up. It's accessible to all AAI members. You do not have to be an A+ Investor subscriber to access the My Portfolio tool. However, there are some diversification analysis and asset allocation tools that are exclusive to A+ Investor. In order to track in order to go to My Portfolio, you can find that there's this My Portfolio icon at the top of every single AAII webpage. And all you have to do is click that, and it will take you to the My Portfolio tool. So with My Portfolio, it's really designed to help investors help users track their investments. It helps you see which holdings are performing well and which ones are performing poorly. And then over time, weightings of holdings will change. And what some investors might not be aware of is as markets rise and fall, you might have started with roughly an equal allocation across different stocks, mutual funds, or ETFs, but over time, these weightings will change. And if you don't pay attention to this, you might not realize that your portfolio is actually being driven by maybe only one or two holdings that have a very outsized allocation relative to other holdings. So these are some of the different tools that are accessible with the My Portfolio service. So this is an example of a portfolio that I created using My Portfolio, and I've also called it My Portfolio. But the My Portfolio tool offers tracking and analysis of broad asset classes, namely stocks, mutual funds, and ETFs. So what I've done here is I've actually created a portfolio of stock and mutual fund holdings that I have. And what I've done is I don't go through and I haven't entered in every single transaction that I performed for all of these different stocks, especially if there's dividend reinvestments or reinvestments within mutual funds. I get a lot of that tracking performance information from my broker. But what I've done is I actually enter in the aggregate amounts of all of the different holdings in my portfolio. So I get a snapshot of the daily changes of my portfolio, as well as then, as I'll show you momentarily, being able to perform some additional portfolio analysis, asset allocation analysis that is exclusive to A+ Investor subscribers. It's also worth pointing out that you can track the cash value of any bond holdings as well as any money market or cash that you might hold. You aren't able to enter in individual bonds, but you can enter in sort of the current cash value of a bond to help you get a better idea of the overall allocation of your portfolio. One of the things that we have added with A+ Investor, and I'll talk about it a little bit later on more in depth, but with the My Portfolio, point out here that you have these different tabs, and I've been showing you actually the portfolio tab previously, but what I'm showing now is the grades tab of My Portfolio. And as you enter in stocks, mutual funds, and ETFs into a portfolio, you can come to this grades tab and you can see new grades that we have created for stocks, ETFs, and mutual funds. The stock grades, the A+ stock grades, are actually grades dealing with several factors that have been found to generate outsized or abnormal investment returns, beating the market over the long term. And these factors are value, growth, momentum, EPS revisions, and quality. And we'll be talking about this a little bit later, but there are numerous underlying data points that are then used to come up with an overall score that leads to these different stock grades. We've also created ETF and mutual fund grades across a number of different data points. And these grades indicate how well or how poorly an individual fund or ETF stacks up relative to other funds or ETFs in its given category. So really the meat of the My Portfolio, and the reason why it's important, and we strongly suggest that as you are creating a portfolio using My Portfolio, that you enter in as much information as possible, including the price at which you bought a stock, mutual fund, or ETF, the number of shares, and the number of shares that you hold. Is with that data, you can get a total portfolio value, and then being able to see how these individual holdings of your portfolio, the weightings of these different holdings as well. So it's very important in order to unlock the full capabilities of A+ Investor, and specifically the My Portfolio diversification tools, is to enter in as much information as you can regarding the underlying holdings in a given portfolio. But here what you can see is that I've entered in the information for my portfolio, and I've come to the Diversification Analyzer tab of my portfolio tool. And you're prompted to ask what kind of investor you are. And these three categories, conservative, moderate, and aggressive, are based on AAII's asset allocation models that we've developed. And these are basically just three very broad, conservative. These tend to be, you might have a very low risk aversion, or you really aren't that interested in accepting a lot of volatility in your portfolio. Whereas someone who is more aggressive, they probably have a longer time horizon and are willing to and can handle or absorb greater market volatility or greater market downturns. So the first thing you do is you decide, you can specify, and you can change this after you've done this, is what kind of investor that you are. And once you've done that, then the service will analyze your given portfolio and compare it to the model allocation of whatever type of investor that you said you are. So in this case, I'm coming up on my 45th birthday in June. I figure I probably still have at least a 20-year time horizon. So I wouldn't like to see that, but I could probably absorb a bit of market volatility and a bit of a market downturn, and hoping that over the next 20 years I'll be able to recoup those losses and then add to my overall position currently. So I said that I'm an aggressive investor. And based on that, then it looks at my current allocation based on domestic and foreign stock allocation, bond allocation, and my cash allocation, and it will compare it to what are considered to be sort of the quote unquote model allocations for an aggressive investor. So in this case, even though I am pretty closely allocated to stocks in general, an aggressive allocation calls for roughly 90% allocation to stocks. I am based on this suggested model, and that's key, that these are suggested. These are not recommended or providing any type of investment advice or portfolio management advice. But based on this model, I'm actually overweighted domestic stocks and underweighted foreign stocks if I wanted to follow this type of model. But I'm also roughly where I should be as far as my allocation of bonds, and have very minimal cash allocation. And then they'll give you an indication of the difference from the allocation of whatever type of investor you've allocated yourself to being. So this is very useful. So if I consider myself to be an aggressive investor, but I found that I might be, my current allocation is maybe weighted 30 or 40% to bonds, then I need to take a step back and say, okay, if I truly believe that I am an aggressive investor, then perhaps I need to change the allocation of my portfolio to better suit someone who considers themselves to be aggressive. Or you might say, you might be telling yourself that you are an aggressive investor, but if you aren't comfortable with these allocations so highly allocated to stocks, then you might have to take a step back and say, maybe I actually am a little bit more conservative or a little bit more moderate type of investor. And that's something to keep in mind then as you make investment decisions going forward. So beyond having an idea of the general asset allocation of your portfolio, it's also a really good idea to understand how you're diversified across stock sectors. I've run a lot of analysis over my 20 plus years as an investor. I've talked to a lot of different investors at different types of meetings and events. And inevitably, I've met so many people that have said, I thought that I was diversified. I owned 4 or 5 mutual funds. I thought that they were, pretty different in their style. But then I realized that I was actually still had a very large allocation to an individual stock or a specific sector. And so this is where the sector diversification analysis that you can have access to with A+ Investor will give you an idea of exactly whether or not you are diversified or whether or not you have concentrations in sectors that either you're comfortable with or will alert you to the fact that you might have an overweighting to a sector that you might want to adjust or pare down to. Now, sector diversification will take into account your individual stock holdings as well as the underlying portfolios of any stock, any mutual funds or ETFs that you hold. So that very first slide that I showed you, the my portfolio that I had, is looking at all the stocks, individual stocks I own, the mutual funds and the ETFs, and it's finding that based on those holdings, I'm I'm actually pretty heavily concentrated in the healthcare, almost 33%, almost 25% in consumer cyclicals, and roughly a fifth of my portfolio in consumer defensive. So you've got 30, 40, 50, 60, 70, almost 80% of my portfolio allocated to just 3 sectors. So I'm comfortable with this. I'm aware of this, and I am a little bit making a little bit of a sector plays here. But if you are trying to be truly diversified, having access to this information is very important. Now, looking at the size diversification and geographical diversification of your portfolios, that only looks at the individual stock holdings of your portfolio. The data that we receive regarding our mutual funds from Morningstar isn't able to easily identify between these allocations of large cap, mid cap, small cap, and micro cap. So these are based on just the individual stock holdings that I have. I can see that roughly 2/3 of my portfolio is in large cap, 1/5 in mid cap, about 10% in micro cap, and another 4% in small cap. And I am invested almost actually exclusive amongst my individual stock holdings in domestic stocks. So these are the allocation diversification analysis tools that you have access to with your A+ Investor subscription. So another useful tool or analysis that we provide to our A+ subscribers is our Portfolio Insights tab. This is a tab within the My Portfolio tab, My Portfolio tool. And what this shows you is how many stocks that I'm tracking. And actually, it's one thing worth pointing out too, that with My Portfolio, you have the ability to favorite one specific portfolio. So the analysis that I showed earlier, the diversification analysis, the My Portfolio at a glance that we're looking at here, this is all tied to one portfolio that I've created using the My Portfolio tool. And within that portfolio, I'm tracking 12 securities, 5 stocks that I'm currently tracking pass an AAII stock screen. 21 of the 105 individual stock grades of the stocks that I hold have a grade of B or better, and I have 2 mutual funds that are flagging some fund or ETF insight that we've also tracked with a My Portfolio. And then you get these stock insights, and these are the stocks that I own that pass at least one of the AAII stock screens. So for example, Burlington is a stock that I own. It's currently passing the estimate revisions down 5% screen. And then it gives you the 10-year return for the stock. Burlington has not been publicly traded for 10 years. That's why you're seeing the NA here. But over the last 10 years, the estimate revision down 5% screen has generated an average annual return of 1.7%. And then we have our ETF and mutual fund insights. And we can see here that VNQ has an ETF, has an expense ratio that's lower than normal within its category, and that the VEURX, the Vanguard European Index Fund that I own, also has a lower expense ratio than normal within its category. So these are some of the different portfolio insights that you have access to as an A+ Investor subscriber. We then take these insights one step further, and on a weekly basis, we send out to all A+ Investor subscribers a weekly Portfolio Insights email. Whereas previously, when I was showing you the different diversification analysis, the portfolio insights that we just looked at earlier, that was only looking at one portfolio that you might have created. The weekly portfolio insights email looks at all of the different portfolios that you've created. And this is an aggregate analysis of all of the stocks, all of the mutual funds, and all of the ETFs that you hold or track, and all of the different portfolios that you've created. So here you get a lot more information. Here I can see that one of the 46 stocks that I track in all of my different portfolios has had at least 2 upgrades or downgrades over the last week. 104 of the 230 individual stock grades for all the different stocks that I track have grades of B or better. 49 of the 230 individual stock grades for the stocks that I track have a grade of D or worse. 24 stocks that I currently track pass one of AAII's stock screens. And then I also, again, have my 2 ETFs and 2 mutual funds that are passing or meeting the criteria of our different insights. So we have stock standouts, ETF standouts, and mutual fund standouts in this weekly email. The best performing stock, ETF, and mutual fund over the last week. The stock that you hold that has the most factors with a grade of B or better. The worst performing stock, ETF, and mutual fund over the last week, as well as then for stocks, the stock that has the number of factors, the highest number of factors with a grade of D or lower. Then for ETFs and mutual funds, you can see the fund or ETF that has outperformed its category in the greatest number of years over the last 10 years, as well as the ETF and mutual fund that's underperformed its category the greatest number of years over the last 10 years. You are, and I'll touch on this a little bit later, but as an AAII member, actually, you're able to track and favorite any of the 60+ stock screens that we track at AAII.com. And if you go through and if you're tracking any individual stock screening strategy, at the My Stock Strategies area of the email, it'll tell you the stocks that have either been added to or no longer pass any of the strategies that you currently follow. Sorry about that, it's had a little bit of a cough. So again, stocks that have either been added to or have fallen off any of the stock screening strategies that you track. And then lastly, you get an overall portfolio comparison, where again, looking at all of the stocks, mutual funds, and ETFs that you hold in all of your different portfolios gives you a breakdown of your overall asset allocation, the A+ investor asset allocation. So this looks at all of the different portfolios that A+ investors have created, as well as the 3 AAII asset allocation models, the conservative, moderate, and aggressive. So you can see how your overall allocation stacks up against these different models and allocations. And then lastly, the sector breakdown, again, over all of the different stocks, mutual funds, and ETFs that you hold, and comparing that to an equal weighted S&P 500 mutual fund. So the weekly portfolio insights email is an aggregate view of all of the different portfolios that you've created using the My Portfolio tool. So moving on past the My Portfolio aspect, which is again the portfolio analysis, portfolio tracking tool that is available for A+ investor subscribers. Now we're going to start talking about more the individual investment analysis tools that are available to A+ investor subscribers. And to that end, we've created evaluators, which allow you to perform analysis of individual stocks, mutual funds, and ETFs. And the goal of these different evaluators is to help you decide where the investment that you're looking at is one that you might want to consider buying or adding to your portfolio, or one that you want to continue holding, or one that you might ultimately want to sell. So this slide here is the an example of a stock evaluator for Anthem Inc. It's actually a stock that we recently added to the Stock Superstars portfolio. And what you'll see here is when you come to the evaluator, you get your initial snapshot, which is a summary of the stock that you're looking at. So it gives you various share statistics, growth data, earnings estimate revisions information, some very cursory financial statement data, some basic valuations, and fundamental ratios. And then you have a number of different tabs that you can select that have more specific data. So for example, you have charts, you have valuations, growth, ratios, analyst, basically buy, sell, hold information, earnings estimates, financial statement data, and insider activity for that particular stock. But what I'm going to focus on right now is what I consider to be probably one of the most exciting new features of A+ Investor, and these are A+ stock grades. These are grades developed by AAII that evaluate a stock based on elements of value, growth, momentum, estimate revisions, and quality. Each grade is a composite based on underlying data fields. And with the grades tab of the stock evaluator, you can see those underlying data points that are used to arrive at each of these different grades. So here we're looking at the grades tab for Anthem. When you at the very top, it gives you a summary of the different grades. So we can see that Anthem's grades a B for value, growth, and momentum. It grades a C for estimate revisions, but it grades an A for quality. Then it gives you some comparative stocks. These are stocks that are in the same industry as Anthem. And then below that, we start drilling down and getting into the specific data points that are used to arrive at the individual grades for a particular stock. So for example, we're looking at the summary value grade data for Anthem. And the value grade is based upon the price to sales ratio, the PE ratio, the enterprise value to EBITDA ratio, shareholder yield, price to book, and price to free cash flow. And you can see here, you get the scores, which are actually the percentile ranks for each of the underlying metrics that are used for the value score, the actual value for Anthem itself, as well as then the sector median. So looking at the price to sales ratio, Anthem currently ranks in the 30th percentile. Anthem has a price to sales ratio of 0.63, and that is considerably lower than the sector median of 4.84. And you get that same level of detail then for each of the individual grades that make up for the overall stock grades for a particular stock. So again, you have additional information for the growth and momentum grades. I'm not going to spend a lot of time going through them, but growth is several growth rates that go into the overall growth grade. Momentum is based on the relative price strength weighted for quarters. And then lastly, we have the estimate revisions grade, which looks at the SUS scores for the latest fiscal quarter and the prior fiscal quarter, as well as the percentage change in the earnings estimate for the current year, for the last month, and the last 3 months. And then lastly, the quality grade, which is based on measures of accruals, asset turnover improvement, buyback yield, dividend growth, and earnings estimates. So in this case, the quality grade is basically it's a pass-fail versus all of the other grades are based upon the actual values of these underlying fields. But you can learn all about this, and you can learn more about all of these different grades at the grades tab of the A+ Investor. Also, we have a very detailed getting started guide that really goes into depth as far as how these different grades are arrived at. So moving on then to the fund and ETF evaluators that we have created for A+ Investor. Here we can see a fund evaluator for the Invesco Oppenheimer Gold and Special Minerals Mutual Fund. Pardon me. So here you have the overview tab, which will give you summary information. It'll tell you the sector, the fund group, the category, the global asset class, the latest net asset value. This slide is a day old, that's why it's May 4th. Expense ratios, different asset holdings, a variety of return data. But here, unlike the stocks, where we have a lot of these grades for the stocks are driven by the overall percentile rank amongst the entire stock universe, most of the grades that we've come up with for mutual funds and ETFs are based on how that fund or ETF stacks up relative to other funds or ETFs in its given category. So for example, the OPGSX fund is down 16.2% over the last month, compared to other funds in the equity precious metals category. That is actually a very, very poor relative performance. So that's why this fund grades an F. Whereas on an annualized basis over the last 5 years, this fund has averaged an annual return of 6.6%, which grades an A. So short-term performance has been very weak relative to funds in its category, but on a longer-term basis, its performance is very good. So that's why it rates an A. Additional data that you get with the fund evaluator are various risk measures. So in the case of this fund, it has a risk grade that ranks it very low in its category. So it's, in this case, it rates an A. So relative to other funds in its category, its overall risk is low. You can see then the portfolio management tenure, and then the overall composition of the OPGSX mutual fund. So for example, this fund is allocated almost 86% to foreign stocks, 12.8% to domestic stocks, and 1.5% in cash. You can also see that the top 10 holdings in the fund account for 43% of the total holdings. And again, we have 85.7% of the fund is in foreign issues. And then lastly, we have purchase information for the mutual fund. And here's where you can find whether or not the fund is open. So if you find a fund that interests you and you want to invest in, this is probably the first thing you wanted to find out, is whether or not it's open to new investors. Then it gives you minimum initial purchase, minimum subsequent purchase for both a regular portfolio as well as an IRA portfolio, as well as overall fees. And we can see here that this fund, relative to other funds in the same category, this has a relatively low overall expense ratio. So it grades out with a B for category expense grade. And then for ETFs, you basically have the same level of detail. Here you can see for the Advisor Shares Vice ETF, ticker ACT. Again, you can see category, fund group, global asset class, expense ratio. So this particular ETF relative to other ETFs in the miscellaneous sector category has a very high expense ratio. That's why it grades out as an F. You can then see how it stacks up to other funds in this category based on a variety of performance information as well. So we've now talked about how you can, the tools that A+ Investor offers to track your portfolio, evaluate the overall allocation and diversification of your portfolio, how you can analyze stocks, mutual funds, and ETFs using A+ Investor. And then lastly, for the last 20 minutes or so, I'll be talking about is actual discovery of stocks, mutual funds, and ETFs, and the tools that A+ Investor offers. So starting off with stocks, A+ Investor subscribers have access to daily results for the 60 or so stock screens that AAII tracks. If you're a current AAII member, you automatically have access to the passing companies lists for all of our stock screens. That information, however, is updated monthly. So if you're looking for more timely results of our different stock screens, then you might want to consider A+ Investor. Beyond that, you can then, pardon me, you can evaluate the individual stock screening strategies using our strategy power rankings. And then you can drill down even further and see whether or not a specific stock, how many of these AAII stock screens it passes, if any. So here we see a truncated listing of all of the different stock screens that AAII tracks. Again, we track almost 60 different screening strategies. We've back tested performance for these dating back to 1998 in most of these cases. A+ Investor subscribers, again, have access to daily results of these different screens, Tuesday through Saturday through the previous day's close. So Saturday morning, the passing companies lists of all of these different strategies are updated based on data through Friday's close. Whether you're looking at this all list screens listing, or if you're looking at just our factor screens or guru screens, a couple things to highlight here, if you're not aware of this, is that we actually tag the different factors that we feel are a significant part of the underlying screening criteria for that given screen. So we can see here V for value, G for growth, M for momentum, S for size, EE for earnings estimates, Y for yield, Q for quality, I for industry or sector, and O for other. So our AAII ADR screen is, we consider it to have strong elements of value and momentum. Whereas if you're looking at, for example, the Buffettology EPS growth screen, that is more skewed towards growth and quality. So here you can see, so if you're a value investor, you might want to then focus on those screens that you see the V. Whereas if you're more of a momentum investor, then you might want to be looking for strategies that have the M for momentum element highlighted. You can also then have annualized price performance over a variety of time periods, as well as the risk index, which is ultimately compares the volatility in monthly price returns for the stocks that are passing a given strategy over the last 36 months and comparing that to the monthly price volatility of the S&P 500. So for example, the ADR screen has a risk index of 1.47. So that means that it's roughly 47% more volatile than the S&P 500. This is what the risk index numbers tell us. So as I alluded to earlier, you can favorite different stock screens that AAII tracks. And at the stocks passing my screens tab of the my screens area of AAII.com, you can see a couple of things. First off, you can see aggregate data for all of the stocks that are passing a given strategy. So for the stocks that were passing the Dremin with estimate revision screen as of the close on May 4th, they have an average PE of 5.8. They have a price to book value average of 1.1. The average market cap of these stocks is 2.2 billion, and they've outperformed the S&P 500 on aggregate by 25.7% over the last 52 weeks. You can then look, if you were to expand, so click on this little down arrow, you can then see the individual stocks that are passing a given strategy with the individual company data as well. So this is the data that you can find at the stocks passing my screens area of AAII.com. You also are able to see the stock grades for all of the stocks that are passing a given strategy, as well as what the average of those grades are for a given strategy. So as of May 4th, I think there were about 20 or 30 different stocks that were passing AI's NEF screen. The average of those translated into a B for value, C grade for momentum, C grade for quality, B grade for growth, and a C grade for revisions, as well as then being able to see what the individual grades are for the individual stocks. The My Stocks Passing Any Screens tab here considers all of the different stocks that have been entered into any of the portfolios that you've created using the My Portfolio tool. It will then look at all of those stocks, and it will see whether or not any of the stocks that you're tracking in any of your portfolios currently pass any AAII stock screen. So in this case, Copart Inc. is a stock that I hold in one of my portfolios, and as of May 4th, Copart is passing 4 of the 60 or so AI stock screens, including the Buffettology EPS growth, the Buffettology sustainable growth screen, the estimate revisions down 5% screen, and the value on the move PEG with historical growth screen. And so I don't think I've shown you earlier, but you see these little stars next to the different screen names. If you were to click in any of those screens and it turns yellow, that means then that you have favorited and are tracking that individual screen. And so any of those screens that you have highlighted and have the yellow star here will then be the screens that show up here, and you then will be showing the stocks that are passing any of the screens that you favorited. So this is how you can go about favoriting a given stock screen, is by clicking on the little yellow star and making sure that it's yellow. And then lastly, and this is actually a relatively new feature, and it's very important to highlight that fact that A+ Investor and AI.com in general is very much a living, breathing organism. And based on user feedback, the bee that I might get in my bonnet from time to time when I'm looking at a different website or something like that, and come across an exciting feature that I think is worthwhile adding to AI.com or any of our other analysts or any of our programmers, we're constantly enhancing both A+ Investor and AI.com in general. And this is a perfect example, these stocks passing multiple screens. This is a feature that we just recently added, probably within the last month, to A+ Investor. And what this does is this will tell you, you're able to specify with this drop down here, list all of the stocks that are in the AI universe, roughly 6,100 stocks. Show me all of the stocks that pass at least 2, 3, 4, 5, 6 is probably as high as that number goes, but how many different screens a given stock is passing simultaneously. And as of May 4th, 3 stocks out of these 6,000 or so stocks that we track passed a minimum of 5 AI stock screens, Neophotonics, Booking Holdings, and PennyMac Financial Services. So it'll tell you the number of screens that the stock has passed. It'll tell you whether or not you hold or track this stock in any of your portfolios that you've created using My Portfolio. And then it will tell you the actual screens that it's passing. So if you are, for example, if you find that a lot of the screens that you favorited, if you find a stock that is passing a lot of the different screens that you particularly like, this might be then a stock that meets the type of investment strategy that interests you. So that might be a stock that warrants additional analysis to see whether or not that's something that you want to add to your portfolio. So the stocks passing multiple screens allows you to see those stocks that are passing multiple AAII stock screens. And it's also important to get a general idea before you start following an individual stock screen, is to get an idea of how that particular strategy performs over a variety of time periods. You know, we were looking at that one mutual fund earlier that has rated an F relative to other stocks, other funds in its category over the last month. But when you looked at the 5-year average annual return, it graded an A. So it's very important if you're looking for a different stock screen, at least when I'm looking for a stock screen that I might want to start tracking, is I like to see a good combination of both strong short-term and longer-term performance. And this is the type of information, the type of analysis you can perform using the screen power rankings that we've added for A+ investors. And here you can select a number of different periods and data fields. You know, one year, 3, 5, 10-year performance, risk-adjusted return since inception, bull period return, so the performance over the latest bull market period, the performance over the last bear market period, a number of different types of time periods and data points to get an idea of how these different strategies performed over differing types of time periods. So here what I did is I ranked in descending order by risk-adjusted return, and again, dating back to beginning of 1998, these are the 3 strategies that have the best annualized risk-adjusted return. So taking into account volatility and overall performance, and gives you the best blend of those 2. We have the estimate revisions up 5% screen, the estimate revision top 30 up screen, as well as the stock market winners screen. So you're able to perform different types of analysis on the strategies themselves to find those strategies that might be of greatest interest to you. And another very exciting feature that we've added is our stock grades screener. So we've talked about the A+ stock grades that we've created. You also have the ability, using the stock grade screener, is to isolate those stocks that meet specific grades that interest you. So in this example here, pardon me, I created a grade screen that looks for stocks with a value score of A or B, a value score of A or B, a growth score of A or B, a momentum score of C or higher, an estimate revisions grade of C or higher, and only those stocks that have a quality grade of A. Pardon me. And as of the close on May 4th, actually, I'm sorry, 17 stocks out of the 6,000 or so stocks in the AAII universe passed this particular set of grade filters. And then you're able to see all of those stocks that passed. You're able to sort these passing companies based on the 5 different A+ grades. You're also able to, as you go around the AAII website, inevitably you'll find tickers, whether those are stocks, mutual funds, or ETFs. You'll oftentimes see a company, a mutual fund, or an ETF listed, and then it has this yellow plus sign. If you click on this plus sign next to any of these tickers that you run across, you're able to add that stock, mutual fund, or ETF to either an existing My Portfolio, an existing portfolio that you've created using My Portfolio, or you can create a new portfolio and add that particular ticker. I alluded to earlier that A+ Investor is a work in progress, not a work in progress, but an evolving service. And one of the couple of the aspects that I'm very excited about adding in the near future when it comes to the stock grade screener is the ability to run these types of grade screens against individual portfolios that you've created using My Portfolio, as well as running screens against stocks that are passing a given AI stock screening strategy. And then lastly, when it comes to mutual fund and ETF discovery, we've created new mutual fund and ETF screeners. These screeners offer both predefined and custom screening over a number of data fields and data types. And then you are able to save these custom screens for return visits. So these are the different mutual fund screening fields based on fund type, returns, net asset value, costs and fees, risk and volatility, fund characteristics, purchase information, and manager tenure. So these are a listing of the different predefined screens that are available with the Funds Plus screener. Coldest domestic funds, high yielding equity funds, hottest sector stock funds, etc. So you can just choose these predefined screens to load up those funds that passed, or you can choose from the different data categories and build your own screens and save them. Once you've loaded a particular screen, whether that be a predefined one or one that you've created yourself, you have the ability then, would be the list of some of a truncated list of passing funds from a screen that I had loaded. You can then click these little check boxes in the compare column, and it will add them to our new compare funds tool. So you can either select funds from the listing of passing funds from a particular screen, or you can manually add funds here, and then it will give you all of the different funds that you have selected and allow you to compare them on a variety of return data, risk index, risk data, turnover data, expense ratio, etc. So this is a great way, if you know that, for example, in this case, I'm looking for a healthcare or healthcare related mutual fund. And so I'm looking at 3 different ones: the Fidelity Select Healthcare Services, the Fidelity Select Pharmaceuticals, and the Schwab Healthcare Funds. And I can see how these different funds that are in a similar type of sector or industry, how they stack up relative to each other, will help me to identify perhaps a fund in a particular category that I might be interested in investing in. And you have the same type of information and screening capabilities for ETFs as well. You are able to select and create your own custom screens or select from a number of predefined screens. In this case, for the ETF screener, you can see here the predefined screens, again, the coldest domestic stock ETF, consistent category winners, hottest sector ETFs, etc. Or you can create your own ETF screens and save them for future review and future analysis. And just like as you were able to do with mutual funds, you can then compare ETFs either manually by entering them in by ticker or selecting them from a passing companies list in that main table that you see when you go to the fund or ETF screener page. So, I think probably compared to most other services that AAII has launched, well, without a doubt, compared to other services that AAII has launched over the 20 plus years that I've been involved with the association, A+ Investor definitely is probably the most robust collection of resources and tools that we've provided under one umbrella. And to that extent, then, we want to make sure that we have provided all of the different resources that allow our A+ Investor subscribers to get the most out of their subscription. So we have a user guide, we have a Getting Started series that all new subscribers will receive once they've signed up. I also pen a weekly Making the Grade subscriber-only email that talks about different ways in which you can use A+ Investor to perform types of analysis. We're also including user-generated analysis techniques that we're also including in there. We also have a weekly Did You Know segment in the Insights email that sort of a little tidbits or hacks that you can use to, again, get the most out of your A+ Investor subscription. And these are just some examples. This is the Getting Started series that you'll get. You can access this information at the website as well. You'll get it by email when you sign up with A+ Investor. This is one of the Making the Grade emails that I've created and sent out. Those go out Monday afternoon or Monday evenings every week. And then lastly, before I wrap things up, this is a question that I've been getting a lot, and inevitably, I see it's come up several times already as people are submitting questions. Is what differentiates A+ Investor from AAII's other premium services? And I think first and foremost, again, it's very important to articulate that A+ Investor is not a portfolio product. It is a tool to help individual investors discover investments, analyze them, and then if you add them to a portfolio, track your portfolio, analyze your diversification, and analyze your overall asset allocation. Compared to the other services that AI has, we have 3 portfolio products: dividend investing, the Stock Superstars report, and VMQ. Dividend investing is definitely geared towards those that are looking to generate dividend income. It's a 24 stock portfolio of dividend paying stocks. The Stock Superstars report, of which I'm the lead analyst, is a 40 stock portfolio using 4 superstar selection strategies based on our interpretations of the strategies of William O'Neill, David Dremin, Jim O'Shaughnessy, and John Neff. The VMQ stocks portfolio is a portfolio of 20 stocks that are meeting at the intersection of low valuation or attractive valuation, high momentum, and high quality. And then lastly, our Stock Investor Pro service software package is definitely designed for do-it-yourself stock screening and analysis. So that just gives you sort of a snapshot of the different services that AI offers and how AA+ Investor ties in with all of those different services. And so, in conclusion here, I've gone a little bit over the hour, but I want to thank everyone again for the time that they've devoted to me today. I very much appreciate that. And as a sign of our appreciation, we're offering a $1 trial today to today's attendees. If you go to www.aai.com/store/A+ trial. And again, you can see that URL here. Unfortunately, I don't think it's in the handout, but so again, www.aai.com/store/A+trial. If you sign up today as an attendee for $1, you'll get a 1-month access, unlimited access, full access to A+ Investor. So with that, again, I thank everyone for attending this evening, and I will then open up the floor for questions, and I will toss it back to John. So thank you once again.
Well, thank you, Wayne. The questions have been streaming in all night, and I've tried to keep up with some of the answers, but I haven't been able to keep up with all of them. But let me, in terms of a couple questions here that have come up that have been sort of common. One question that's come up quite a bit is how does the value score compare against, say, VMQ or any other service that the association might offer?
The value score, actually, we've unified that for A+ Investor and VMQ. So, if you're looking at a stock under the construct of any of the A+ grades or within the construct of the VMQ, the value grades have been unified. We're using the same methodology for both, but with A+ Investor, VMQ, it's obviously value, momentum, and quality. And for A+, we've added the elements of growth and estimate revisions.
So basically, whether it's value, momentum, or quality, those are the same in any one. I guess the question then comes about, can you use A+ Investor with a Mac?
Yes, and that's We get that question a lot. Yes, A Plus Investor is an online service. It is not a software package. So any device that you can pull up a web browser, so that either your phone, tablet, your computer, whether that be Windows-based or Mac-based, you're able to use A Plus Investor.
Does the A Plus Investor have the ability to compare two stock charts and two stocks in the same chart?
That's a good question, actually. One that I'm not 100% sure on. I do know we're actually working to add potentially some more robust charting capabilities. I want to say offhand, no, but I'm not 100% sure on that. Whoever's asking that question, feel free to follow up with me at either wayne@aai.com. Anyone to actually matter. If I don't get around to your question, or if you think of a question after the fact, you can reach out to me at wayne@aai.com or aplus @ai.com, and I'd be more than willing to get back to you probably within 24 hours.
In the stock evaluator and like under growth, when you see something percentile of all stocks, what does that mean exactly?
The percentiles that we display on the different for stocks on the evaluator pages, those are comparing that particular value against all of the stocks that are in our stock universe, roughly 6,000 or so. So, for example, I think we were looking earlier, for example, price of sales for a given company. If you see that it has a percentile rank of 30, that means that based on all of the stocks that are in the AAI stock universe, that ranks in the 30th percentile. So that's has a relatively low bottom 30% in price to sales relative to all the stocks that we track.
Another question here, and I'm not sure how easy it is to answer. So the grades aren't exclusive to A Plus Investor. So George here is asking, are the stock grades available to all AAI members?
You are able to, for example, with the AAII stock screens, you can pull up grades for a strategy and find grades for an individual stock. But as far as drilling down to see what the underlying values are for those grades, be able to perform the screening using the grade screener and things like that, those are exclusive to A Plus Investor.
A number of questions have come up about security and how secure is the data. And I know probably be better almost if we had Nick here answering this question, but how secure is the data? And a couple of questions regarding can people just simply keep data on their own computer and access their information when they go online?
Well, John alluded to Nick, who is our director of technology at AAII. And, if you were ever to meet Nick and ask him his thoughts on security, he could basically go on for many hours. And, it's very obvious the level of importance that Nick pays when it comes to security. And actually, that was something that he and I talked about quite a bit as we were developing A Plus Investor. So a sort of a layman's answer is, if anyone were to access or get into AAII's computer system, they might be able to see a portfolio and the holdings that are in a given portfolio. But the way in which our data is protected and the structure of our databases, there's absolutely no way for someone to be able to say, for example, that if they saw the portfolio that I was showing earlier, to say that that particular portfolio is associated with Wayne Thorp's AAII membership. So someone might be able to pull up and look at the holdings in an individual portfolio, which would be a rarity because Nick also devotes much time and effort to make sure that our servers are absolutely secure, but there'd be no way for anyone to be able to identify that a particular portfolio belongs to a specific individual.
And I have a member here who's primarily an index investor and wants to know, if you're primarily an index investor, what does A Plus Investor offer for them?
To be honest, you definitely wouldn't be using the full array of tools that you would have access to. But even as an index investor, there's the ability to identify and search for index funds based on different types of performance figures, as well as, probably when it comes to index investing, probably one of the most important things that people sometimes overlook is the issue of cost. So you're also able to perform screens using the A+ investor fund screening tools to identify funds that have relatively low expenses. So you definitely wouldn't be using A+ to its fullest extent, but there are definitely tools still, though, that would allow you to discover potential index investments.
Excellent. In terms of, would you say that the tools, if you're a stock investor, are the tools in A+ investor more slated towards a value or a growth investor?
Actually, I think it runs the full gambit. That's one thing that I've really love about AAII is we truly believe that there's no such thing as one size fits all when it comes to investing. And for that reason, I've been covering quantitative stock screening literally from day one, April 1st, 1997, when I walked into AAII and sat down. I was actually at that point given a disc of Stock Investor Pro and was told to learn this and love this program. And I have developed numerous stock screening strategies in my time at AAII, and they have been, highly price and momentum oriented, deep value. We have of our 60 different stock screening strategies that we track. They run the full gambit as far as growth, value, quality, etc. But then even when it comes to using our stock grades, you can run a screen wide open that I could care less whether or not what type of growth it has, but I only want to focus on those stocks that have the absolute deepest value. On the flip side, you could say I could care less. I don't care if a stock has a PE of 80. If it has the price momentum and growth characteristics that I'm looking for, I can identify those as well.
I see a couple questions here, and they're thankful for the trial of option of the service right now and to play around with it. But then they're wondering, what is the cost of the service after the trial?
The annual fee then is $149. So yeah, you get your 1 month dollar trial. No risk there basically. But then if you were to renew, it would be at the annual rate of $149 a year.
So member here is just asking kind of hypothetically here. So if he happens to have an ETF with a low grade, does that mean you should consider selling it?
I first and foremost, just because of the ratings, I would not sell based exclusively on the ratings. What I view the grades are is, it offers, I view it as sort of like a stoplight. If I see a stock or a mutual fund or an ETF that I have that, has a lot of reds, that's definitely, then I want to do some additional analysis, see, is this a fund that I want to hold? If it's still in a category that I feel strongly about, do I maybe want to see if there are other alternatives that are out there? Same thing, even though it might be all green, there's still, I feel more comfortable about that. But just because it's all green doesn't necessarily mean that it's the best either. But I view them as guides, or at least to help me direct where I should be looking for some potential smoldering fires.
And a lot of members noticed here that you're in charge of development here. So I've seen, an overwhelming number of questions or requests to be able to import brokerage data into the portfolio manager. So I wanted to pass that on to you, and I guess I'll let you address that question right now.
Duly noted, and I understand the frustration that some people are having. That's why, personally, I use the portfolio tracker more on an aggregate basis. So basically, if I've performed a bunch of dividend reinvestments over the years, and that's taken me to a current number of holdings, that's how I'm using the portfolio tracker. But yes, I fully understand that trying to enter in, especially if you have a large portfolio, even just doing aggregates can be time consuming. We are looking into ways in which we can allow people to import their information. I can't make any promises as far as the time frame on that, but it has been duly noted. And actually, that was something that I was even hoping we could get to before launch, but just realized that it's more of a lift than we were anticipating. But your concerns and frustrations have been duly noted, and that is the top of a wish list for future enhancements.
But I think you can, and this is a question that came up here. Are there any plans to be able to paste a list of tickers into a portfolio rather than inputting them separately? And I think that option exists currently. Isn't that correct?
Actually, that is one pivot we actually made as we were doing the development, is allowing to we have, when you first create a portfolio, you basically have a window where you can enter in tickers, whether those be either by spaced or comma delineated, and you can do a mass paste into that initial setup to so you don't even have to be entering in tickers individually there.
Very good. Let's see here. Couple questions here. In terms of, I see so many questions floating here. Sometimes I get lost myself on this. Any plans, and this is perhaps directed towards you and perhaps to Ryan if he's still listening, and he probably is, but he has his microphone off. Any plans to offer an online forum where members can share ideas and talk amongst the different kinds of screens they've created or analyses they've done?
I mean, I don't know, speak for Ryan, but I've been party to a lot of those conversations. And yes, as a membership organization, we very much appreciate the strong interest in that sense of community. And we are looking into one of our future enhancements for our website is to reintroduce some online communities that will allow people to interact with members in general, but then also probably develop different sort of topical areas where people can discuss more specific information, such as stock analysis, stock screening, and things like that. So that is definitely on a future enhancement for AI.com. I don't know a specific time frame behind it, but we definitely are looking into that.
Yeah, it's definitely in the works.
Ryan, the voice from above.
And a question here from Roger. Why would I want to create different portfolios?
It probably ultimately depends on how you're invested. At this point in time, you're not able to, like, for example, for a diversification standpoint, you are only looking at one individual portfolio at a time. We've done some analysis, and we said the typical A+ investor subscriber is only creating like 1 point something portfolios. But if you are more of a quote unquote power user, you might want to create a portfolio of a tax deferred account, a retirement account. If you're tracking portfolios for friends or family, being able to keep those things isolated. And another enhancement that we hope to roll out sometime in the relative near future is the ability, when you're performing a portfolio analysis, is to specify, let's say you have 10 portfolios that you've created. 3 of them maybe are tax deferred, but you want to perform analysis of only your tax deferred portfolios and be able to specify which portfolios you'd like to include in an overall portfolio analysis. So at some point in the future, that will definitely be an added incentive to create separate portfolios.
I guess tied to that, there's a question: is it possible to create a watch list?
Yes. Basically, you can create a watch list where basically you can just put in the tickers. You don't have to put in any type of purchase price, number of shares, or anything like that. And then you can pull up that within your portfolio. You get daily performance information, as well as able to look at grades and some of the other aspects to it. The only thing that you wouldn't get access with if you've created a quote unquote watch list is you wouldn't be able to perform the more in-depth portfolio analysis, diversification analysis, because that's driven by the number of shares and whatnot that is able to drive then a total market value of the portfolio.
And I think the answer is going to be a simple no on this one. but does my portfolio help with the Sharpe ratio and efficient horizon analysis mean optimization?
It does not.
And then this is probably someone who we're running long here, so this is probably going to be the last question here, Wayne. So, and
Okay.
it may someone is questioning your asset allocation or your investment in sector investing here, but someone's wondering how come you have such a low allocation towards tech stocks?
I mean, that basically comes down to the different. I am primarily invested in mutual funds, but then I also have a very strong value slant. So, the mutual funds that I'm invested in are the Vanguard European Fund, Vanguard Healthcare, S&P 500, and Vanguard Small Cap Value, and Vanguard Real Estate. Those are the mutual funds that I hold. And then as far as individual stock holdings, I'm almost exclusive to a very deep value investment strategy. So be able to come up with individual stocks, tech stocks specifically, that meet a deep value classification are rare. And then just the overall mutual funds that I hold just don't have that level of tech exposure.
Well, thank you so much, Wayne. It was a great presentation. A lot of members have complimented you on the informative nature of this thing, and I want to remind everybody who's listening that we have recorded this webinar, and a webcast replay will be available. An email will be sent tomorrow, and we'll also have we have a YouTube channel you could subscribe to. And if you go to the events part of our community section on our website, there are links to this and upcoming webinars as well. In fact, if you join us next Wednesday night, we're going to have Charles Watblood here, and he'll be talking about the CARES Act and a number of elements that are very relevant in today's marketplace. And then the week after that, we're going to have Derek back, and he'll be discussing some dividend investing questions that have come up. And so our goal is to try to keep bringing you these live events every Wednesday night. As long as you people keep tuning in, we'll keep presenting them for you. So thank you very much. It's been a wonderful evening. Thank you, Wayne. Very informative presentation. And I look forward to perhaps being next to you one day back in our office rather than being across suburbs as we are right now.
It's hard to believe it's been 2 months without setting foot in the city of Chicago, let alone interacting with my colleagues. This is definitely interesting times for sure.
Very good. Well, good night.
Be safe, everyone. Have a good night.